All right, back to work. Break time is over. Boy, fantastic day today. It wasn't pretty. It was a bit messy, but how about that beautiful range rotation we talked about in last night's video? Sounds like a lot of you guys made some money on that, so well done on that. Now, speaking of ranges, we got these beautiful range-bound markets right now. If you know my style of trading, I love range-bound markets. I wish every day was a sideways range because ranges act like magnets. They love to rotate. They give us beautiful breakout pullbacks. So we have a lot to cover in tonight's video. I have a bunch of trades I'm tracking. Well, the markets are closed tomorrow to honor the late Jimmy Carter, but we got non-farm payrolls coming on Friday. So I want to cover the roadmap for the rest of the week, make sure everyone has a game plan, a roadmap to make some money into non-farm payrolls on Friday morning. So charts look pretty darn easy right now. Enough for the intro. Let's go find some more winning trades for tomorrow into Friday. It's been a fantastic week so far. Charts look fantastic. S&P SPY is ready. Nasdaq triple Qs are all ready. I have two pretty simple and really important clues on the charts in front of us right now that are telling me where I think the winning trades are waiting for us tomorrow and Friday morning. The first clue, of course, is right here on these hourly charts. We have a bearish market into a trading range on the S&P 60 right now. Bear market into a trading range on the Nasdaq triple Q 60. Remember, I like to use these hourly charts for an overall directional bias. So one big clue for tomorrow and into Friday is this overall bearish directional filter here, bearish directional bias. Momentum is bearish overall. That's very important because that will give us a filter for tomorrow. But the one thing these hourly charts don't do, they're not going to help us time the entries. We have one, I think, probably even more important clue on the faster time frames. We're going to grab those in a second and time some entries, get a bunch of bull traps and bear traps. We'll talk about that more as we go deeper. Before we do that, though, let's check schedule for tomorrow because, again, tomorrow we have kind of a day off tomorrow, if you want to call it that. Stock markets are closed. The futures markets will close, I believe, at 9:30 Eastern time tomorrow morning. So not a lot of trading to be done most of the day tomorrow. But remember, non-farm payrolls are coming out on Friday morning. So there will be some fireworks late on Thursday evening into Friday morning. So I want to make sure we're ready to capitalize on that here in tonight's video. So we'll prep it all up tonight and get ready for the rest of the week this week. Markets are getting closed. They should be closing up tomorrow, according to the CME Group, at 9:30 Eastern time. The big news, though, is on Friday morning, that employment number at 8:30 Eastern time. We'll come back tomorrow night and we'll kind of catch up with what happens early in the morning tomorrow. We'll come back tomorrow and talk more about non-farm payrolls on Friday. But let's get back to our charts, though, because even though the markets are closed up for tomorrow, there's a lot to be looking forward to the rest of the week. I mentioned earlier, the first clue we had was the overall bearishness here on the hourly chart. Let's drill down to our tick charts, though, because tick charts, they're based on volume. They make pattern recognition a whole lot easier. This is a 7,000 tick chart, in case you're wondering. All the time frames there are in the upper left-hand corner. And if you're watching for the first time right now, that yellow line right there, that is the 21 EMA. It's pretty much the only indicator we use every day in our trade room to find lots of winning trades. Now, you can see right away here, the big clue on the tick charts right now, this range right here. Now, ranges are, again, they're magnets. They love to rotate. If you've taken my free trading classes yet, you probably know why I love ranges so much, because once you learn how to trade this rotation back and forth, it gets a lot easier to make consistent money. You'll definitely get better at avoiding losses. That's for sure. Now, when it comes to ranges, it's pretty simple, right? I want to sell high, I want to buy low, and trade that rotation. Now, it's important that we remember the bigger picture 60-minute time frame, because we're overall bearish right now on the 60. What that means is I'll be using different types of entry setups to sell off the high than I would be using here to buy off the low. When I'm going with momentum, I can be a lot more aggressive selling off the high rather than being a little more cautious trying to buy off the low. So tonight, let's talk about kind of some fake out breakouts, right? Fake out breakouts off the high, bull traps off the high, bear traps off the low, fake out breakouts off the low. We'll talk about those here tonight. For example, as we go higher here, this is a horrible spot to be buying up here, right? Because again, we get a range below us. That's going to act like a magnet. We're overall bearish on the 60-minute time frame. So one of my favorite types of bull traps or fake out breakout to sell back off these highs is you know me, I'm not going to pick a top on this, right? I'm not in the business of picking tops and bottoms. What I'll do is I'll wait for a breakout and then look and see if I can trap in some rookie buyers that get caught buying up here. So once I see buyers trying a couple times up here, one easy way to get a bull trap is to think about now, where are their stops going to be? Now think about this. If you're caught long and you get stopped out of a long trade, you sell your way out. I call these failure patterns in our free trading classes. Now, where's the market want to go? It's going to want to rotate all the way back down again. So as it drops off the high here, this is where we can add to our winning trades. And to do that, I'm going to look for what's basically called a technical bull trap pattern. Now, make sure you learn this setup because it's a lower low in price and to move right above that high. So I've got like 3 different bull traps I'm looking for overhead. One of them is this failure into technical bull trap pattern combination. And again, the idea would be to roll this thing back down. We can then buy it up off that low. And we'll talk about how to buy it off the low a bit later on in this video. Another variation of a bull trap, very common. We oftentimes make a run going higher, but there's so many bears up here, it gets whacked right back down again. I don't get the opportunity to trap the buyers in and sell into their stop losses. So if we make a run going higher here, but it gets whacked back down again, these V tops are oftentimes one of the easiest ways to trade a bull trap because now that momentum starts to shift over. Now the key is this, you don't want to chase after it. You want to mark off that low, find that channel off the high like this. Now look left, find some of these prior swings. And my favorite trade here is to grab the first test. We always say first test is the best test. Grab the first test off the high of that channel. And ideally, I like to do this just above one of those prior swings. Now, in all reality, this could be a bull trap like I'm showing here, a technical bull trap. It could be a buyer failure on a faster time frame, right? A pullback combination. The bottom line is I'm going to get above that prior high, get that first nice strong red candle signal coming off that moving average right off the top of that channel. So a second type of bull trap I'm going to watch for tomorrow is a V top up here. V top. Let's talk one more here, one more variation of a bull trap. You know, oftentimes we'll get a strong run up. We'll get up into resistance, up overhead. We'll get those buyers once, those buyers twice. Remember, lower lows, right? When those buyers come in, trap those buyers in. We oftentimes get a bull trap up here, a buyer failure pattern, we call it in our trade room. We'll run back lower. Remember, this is a range right here. So oftentimes breakout pullbacks will hold off the top of that trading range. They'll make a run going higher because, you know, it is pretty bullish right now in the short term, right? Not very bullish though in the long term. Oftentimes, those buyers will come in, they'll hold the breakout pullback, and they'll run back up and take out that high. Now, this is where it's important to recognize kind of who's participating in the market right now. Anybody who buys that pullback, where do you think their profit target is? Yeah, it's back up and retest the high. So buyers down here, does it make sense they become sellers up at that high? We're an overall bear market right now on the 60-minute time frame. So as we go back to retest the high, there's a lot of buyers turn to sellers up here. Is this a good place to buy right now? No, right? This is the last place you want to buy, not in an overall bear market. And therefore, these double top retests, do it again. 1 try for the buyers, 2 try for the buyers, trap those bulls in. Think about where their stops are, or as my first mentor would always say, think about where their pain is, right? And sell right into those stops. And remember, the market wants to rotate down again. So as we go lower here, you want to make more money, add to your winning trades. An easy way to add to your winner will always be with a trap pattern. Again, a double top is a fantastic spot for a retest trade, that 2-try failure into that bull trap as we run lower. Now, I want to talk about going lower here and buying off that low. Before we do that though, let's slow down for a few moments here because we've covered a lot so far in this video. I know most of you folks watching right now, you know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new language. What are traps? What are failures? How do we trade ranges? Don't you worry though. I teach this entire system. I have a ton of examples, failures, traps, double tops, V-top reversals. Guys, I cover so much more of this in our free video classes. What I'll do is I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that tells me exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry patterns so you can time better entries, make a lot more money each day. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up right there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it's 100% free for you. And also keep in mind too, if you can't get the link up top there, I'm going to put all the important links we talk about tonight in the description of the YouTube video. Definitely start first on the free video series. Most folks start making money on their own by simply taking that free video class. And don't forget, every day, 8 o'clock Eastern time, the place to be is in our trade room. I'm going to put trade room membership information there for you, the description of the YouTube video. And boy, I post a lot of charts, videos, mindset stuff on Twitter or X as the kids call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more are linked up in the description of the YouTube video. So now you know where to learn more about and see a lot more kind of real examples of how these patterns actually play out on real charts. Now, I want to cover a couple more trades here. In a second, we'll talk about the Nasdaq here. We'll grab that long side scenario off the low here. What if I'm wrong? What if I'm wrong? I would like to go up, trap some bulls in, and run back down again. We got non-farm payrolls coming out on Friday. What if I'm wrong on this? What if that news comes out? What if, remember, tomorrow's kind of a weird day. Markets are closing at 9:30. They're reopening again at 6 p.m. tomorrow night. So a lot can happen while the markets are closed. What if we reopen tomorrow and we get a really, really big move going higher? If we make a big run going higher, really strong breakout going higher, anytime we see a big move, what do we look for? A 2-legged pullback and a retest of the high. So if we get surprised sometime in the next 24 hours here, if we see a nice big move going higher, I'm going to look for a 2-legged pullback. And when I say 2-legged pullback, think about a measured move. All right, think about a measured move. What will probably happen is we'll get a 2-legged pullback somewhere around the prior tops of that trading range. What I would love to do is use that 2-legged pullback to basically buy a breakout pullback. Now, that 2-legged pullback will give me the general area, but I'm not going to pick a bottom on this, right? Because it may roll over and keep going down again, right? I don't have a crystal ball. I can't predict the future on this. What I can do though is once this thing starts to pull back to that moving average, if I see bears trying once, trying twice, now think about this. If you're caught short and you get stopped out of a short trade, those stop losses trigger a short squeeze, right? They trigger long buy orders right there. So again, strong, big move up, 2-legged pullback, allow buyers to buy nice and low. I'm going to trap in those bears and use that same failure. But this time around, on the way back up to retest the high, it's a technical bear trap pattern. It's a higher high in price, buy right below that low. Failure into trap combination. Now, at that point, where's the market want to go? It wants to go back up and take out that high. Anybody who buys on that pullback, myself included, will be taking targets back up at that high. Buyers down here will become sellers up here. So if I can get that strong run up, that 2-legged pullback and that retest of that high, Is this a good place to buy? Of course not. It's the last place you want to buy. That means it's a great spot for a bull trap or a double top reversal. 1, 2, trap those bulls in and run that sucker back down again. Big move up, 2-legged pullback, trap the bears in, 2-try failure, squeeze those stops, back to retest the high, trap the bulls in, and roll it back down again. That would be how I'll trade this if for some reason we get this big blast, because again, markets are closing up tomorrow, and that scarcity, that lack of availability oftentimes leads to big moves when the markets do reopen. That's my game plan now as we go higher. Now I want to talk about though as we go lower, because in all reality, the move lower could really be one of the easiest trades we get all week. Now, here's a challenge though. We're overall bearish. I have to be a little bit more patient on the entry off the low here. Let's talk about that right now on the Nasdaq. Before we dive in though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies, because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days. I appreciate you all spending a few minutes with me every evening here on these videos. So thank you so much for the likes, subscribes, and all the ongoing support. Now, let's get back to business, shall we, here, and dive into the Nasdaq. First things first, on the hourly chart right now, you can easily see that bear move down into that big trading range. Remember, the higher time frame is excellent for giving us the directional filter. That's really important, because now, as we go over to our faster time frame, our tick chart, there's that beautiful range. Once again, ranges love to rotate back and forth. The same game plan we mentioned on the S&P can be applied on the Nasdaq. Keep in mind, one thing about the Nasdaq is the Nasdaq has a range up overhead. If there's one thing you learn from me, I hope it is breakout pullbacks. That's a prior trading range. So you can imagine right now, there are going to be a ton of bears up there looking to short up above the top of that trading range. It'd be a great spot for a run up, trap those bulls in. That same game plan, right? The same 2-try failure, the same bull trap combination. I don't want to repeat myself too badly here, because you can go back and watch the video here for the S&P, but it's that same failure in a trap pattern. It's that same V top that I mentioned earlier, finding that channel, right? It's that same double top reversal I mentioned earlier. All right. So I will go over that again here. You can go back and watch on the S&P. Now, let's talk about going lower here. If we go lower, one really cool part about this chart right now is both the S&P and the Nasdaq, they have this big low down there, right? On the Nasdaq, it's 983. You can see that big low here on the Nasdaq, 60. It's a very similar level, of course, on the S&P. So as we go lower, boy, it's unless we can get a really big breakdown, it is very difficult to justify selling as it goes lower, which means I think it's a great spot to look for a bear trap down here. So as we go lower here, boy, all this area, really all this area right in there, that whole area right there is just ripe for a bear trap. Now, remember, I have to be a little bit more cautious on this move going lower. On the move going higher, I can use what's called a failure pattern, right? A little more aggressive failure pattern. As we go lower, this is where I have to get a technical bear trap. Now, what does that mean? Well, in our video classes, we call these crown reversal patterns. So as we go lower, this is the horrible spot to be selling, which means it's a great place to trap in some rookies and squeeze their stops. We all have to learn our lessons somehow, right? And the rookie's gonna learn some way, right? Let those bears try once. Go higher. Let them try twice. Now remember, whenever I'm trying to trap in sellers, it needs to be a higher high in price. Why a higher high? Because sellers want to sell high. So as it pulls back, we attract in more sellers every time it makes that higher high. Now, to make sure I'm not getting trapped on the wrong side of this, I'm going to look for that move right below that low. I'm going to want to see a nice strong green candle closing back above that moving average. This looks a lot like a failure pattern, right? A failure pattern runs lower, bears once, bears twice, and I'm buying above those highs right there. Okay, on a failure pattern, I'm buying relatively high. I'm buying as the price goes higher. It's more aggressive that way. A bear trap pattern, I'm getting underneath that low. I want to be long before we get this thing going higher. Makes sense? A bear trap is a much safer way to do this, and it's pretty much the only way to do this reliably here in this environment. So the first one is to stack together some bear traps here. We run lower, trap the bears once, higher high, right? Trap them twice, strong green candle. Now remember, where's the market want to go? It's going to want to rotate to the other side of that range. Measure the amount below, measure the amount above, right? Use those pendulum swings we talked about in last night's video that worked so well today on the S&P. Now, how do you add to your winner? You add to your winner with, it's always going to be a trap. It'll always be a similar pattern to this one. Now, this will look a bit different. It's the same exact pattern, though. Higher high in price, always a higher high, move right below that low. Do you see how this is the exact same pattern, right? One is more of a reversal pattern. That's why I call these ones crown reversals, right? Same pattern though, right? It's a reversal variation of it. So crown reversal there. And then this one is more of a continuation bear trap. Most people learn this one pretty quickly, but the more difficult one, of course, is the crown reversal, right? That reversal bear trap off that low. Buying as low as I can with those bear traps. Very similar to that failure trap combination we mentioned up top, right? Go up, 1, 2. It's just a little more aggressive off the high. That failure pattern is a bit more aggressive off the high. Now, as always, if we don't get that bear trap down there, sometimes these things will run lower. There's so many buyers down here, so many bears get spooked, right? It just whoop and runs right back up again. If it V bottoms off of that low, remember this pattern. You'll learn to love this pattern, this V bottom, or as we call it, pop and grind patterns in our trade room. Remember, at this point, that little voice in your head is going to tell you to chase after this. All right. I know I'm not the only person that has that problem. That voice in my head is always saying, come on, man, get in, you're missing it. But I'll tell you right now, most of the time, you're better off waiting for a pullback. The first test off the low of that channel, look left, find some prior swings. My favorite entry on these V bottoms is to combine the low of that channel and get just a little bit below one of those prior swings. Bear trap pattern. This could also be many times it'll get below the moving average like that for a failure pattern. This will make a lot more sense too, by the way, once you get into our free video class. I have a lot of examples of this trade in our free video course. So a V bottom reversal is that first test, is the best test, and whatever you do, leave the runner, right? Leave that runner because the market's going to want to rotate back to the side of that trading range. And I'll tell you, if we're lucky tomorrow or into Friday morning, if we're lucky on this, we'll get that run going lower. We'll get those bears once, bears twice. We'll get that bear trap off the low. With all of that momentum going lower, we oftentimes do see a winning trade going higher, but then for whatever reason, they hold the underbelly of that range. Ranges love to break out, pullback, and then make another run going lower. Now, in my experience, these oftentimes become measured moves. One leg, two leg, right, down like that. So really anywhere, obviously that low, that double bottom, but again, anywhere really between that low and that measured move, right? So anywhere in that area right there. We'll know more about this, of course, once we see this on the charts later on in the week this week. But once I retest that low, think about this. Anybody who sells short right here, they're taking their profit, right? They're becoming buyers at that low. Remember, we have that big key area of support on the hourly chart right below us. So this is a really difficult area to justify being a seller. Therefore, that means the big money will probably be staying away. The small money, right? The dumb money, if you will, the rookie traders, right? They'll come in, chase after. Now remember, on a double bottom like this, I can be more aggressive. right? I can be more aggressive with that failure pattern once, twice. Now, why can I be more aggressive on the retest trade than on the initial trade? Well, because on the initial trade, I don't have anything else to work with yet, right? It may keep going lower. I don't know. We're overall bearish. But once I know where that low is right there, then we go back and retest that low. See, now I have structure I can work with. Most importantly, now I know if we do bounce off that low, I know where the market wants to go. It wants to take out that high. So what we'll do here is once we take out that low, or again, right, once we get, think about that measured move down there as well. Once we get down to that low at the very least, we'll trap in those bears, look for that 2-try failure. Now, I would not argue one bit if this turned into another bear trap, right? I would not argue at all with another crown reversal and a bear trap going higher. Same pattern, right? Same exact pattern. I wouldn't complain about that at all. But it's not necessary on the retest because now we know this is a horrible spot to be selling. They're right into that prior low right now. So 2-try failure, crown reversal. Here's the key though, guys. I want to think about the size of that range. Okay, think of the size of that range. Now that range right there, think about where is the midline, right? Where's the 50% of that range? I want to be getting in as far below that 50% line as possible. That will give you a good filter to know, because sometimes it'll run lower, it'll double bottom like this, pop up in one like that, right? I don't want that trade, right? That's not going to work. Makes sense? Right? Because that risk is here, that reward, that's not going to be good enough for me on that one, right? If it is the case, now it needs to be a trap. It needs to be a trap pattern now, right? Because now I need to get that risk reward ratio balanced. Does that make sense? Right? Think about the size of that range now. Where's that halfway point, right? I want to make sure I get the entry underneath that halfway point. Again, think about risk reward, right? At least 1-to-1. Okay, hopefully that makes sense. But double bottoms, I can always be a little bit more aggressive on that double bottom as long as I'm not doing it too high up, too close to that high up there. All right, double bottom retest. And if we start to get this thing really ripping higher here and blasting higher, getting some separation off that moving average, it'll always be the add-on trade. It'll always be a bear trap. It'd be a higher high in price and the add-on trade. So if it separates off that moving average, starts ripping going higher here, it'll want to rotate to the side of that range and look for those bear trap patterns to add to our winners from there. All right. Hopefully that risk reward, kind of understanding the size of that range. Hopefully that makes sense as far as choosing whether or not a failure pattern or a bear trap crown reversal pattern is useful. Any more questions on that? Give me a comment in the comment section. I'll be checking that later on and make sure you guys are aware of that. All right, guys, that's the game plan for tomorrow into Friday morning. Now, don't forget the place to be tomorrow morning, 8 o'clock Eastern time. We'll update our charts overnight and trade the plan together. Guys, the easiest way to make money in these markets is to learn and trade along every morning at the opening bell. I'm gonna put all the important links we talked about tonight, the description of the YouTube video. I would definitely recommend start first on the free video series and join all the trade examples. Then come join us 8 o'clock in the morning every morning in a trade room and we can trade it all together. In the meantime, guys, be well out there, be nice to each other out there, and be here next time, will ya? Adios, amigos. Bye for now.